Okay, this is problem number 5. The following balances appear on the books of Harvey Tillman. So we have these account balances that already exist, and requirement 1 says the T accounts have been set up for you. Insert each account's adjusted balance. So all you're doing is entering these balances on the normal balance side. So retained earnings normal balance is a credit. Service revenues normal balance is a credit. Let's see, 23.9. Dividends normal balance is a debit. Dividends are 8,100. Salaries expense is 6,900. A normal debit balance. Rent expense is a normal debit balance of 3,600. And let's see, advertising expense normal balance is 3,200. So we have entered all of our normal balances. Then the second requirement is post the closing entries to the accounts denoted posted amounts as closing. Start by closing revenue. So we only want to start by closing the revenue account, and we are closing the revenue account to income summary. Then you're going to, let's see, close all the expense accounts and calculate the postcode closing balance of each expense account and the service revenue account. So we're going to go ahead and give the zero balance, and then we need to close each expense. So this would be 6,900. So now it has a zero balance. This one will be a balance of zero now that we closed it, and this will be a balance of zero. So we've closed all of our expenses accounts. Now we need to get a total here. So 6,900 plus 3,600 is 10,500 plus 3,200 is 13,700. 10,500, that should be right. So we're going to put that on the other side of the income summary. It did not say, let's see, it did not, for the income summary, calculate and enter the balance before posting the entry to close out the income summary account. So we do need to get the balance here. Actually, no, we don't need to get the balance, because if we did, it would have a bottom. Okay, so it does want us to get a balance. So we will do 23,900. I thought the directions did say get the balance. So you want to go ahead and get the balance of the income summary before you close it out. I should have scrolled back up and saw that. Before posting the entry to close it out, we want to calculate and enter the balance. Okay, now it says, next close the income summary account and calculate the post-closing balance for the income summary account. So we want to close the income summary account, so we're going to debit it, and we're closing it to retained earnings, so we want to credit retained earnings for, I've already forgotten how much, 10,200. So let's check it. Okay, then the last step is, it says close dividends and calculate the balance for the dividends account after you close it. So let's close dividends. So it's 8,100. And now the balance is zero, and we just credited it, so we have to debit retained earnings for 8,100. And then finally, figure out the balance of retained earnings. So we're going to do 27,600 plus 10,002, which would be 37,800. 8, and then we're going to do 37,800 minus 8,100, so that would be 29,700. Okay, the other question that I believe we had questions about was, let's see, I need to go back and work number 6 again, but I think the other question was this balance sheet, so I will work another one of those. So you just need to click on your trial balance and put your assets in. So this is going to be first current assets, cash of 1,500, and then accounts receivable of 700, and then office supplies of 500. And you need to get your total here. Total current asset. So 15 plus 7 is 22, so that would be 2,700. Then you need to get your section of property, plant, and equipment, which is your equipment is the only one you have, is 20,100, less your accumulated depreciation, which is 1,400. So your total property, plant, and equipment, subtract your accumulated depreciation from your equipment, and you would get 18,700. And then your total assets would be 18,700 plus 2,700. Hopefully I entered all of that correctly. Now your next section is your liabilities. So you're going to have your current liabilities, which is your accounts payable of 700, and then you have your interest payable of 1,000. And then the notes payable, they tell you up here that is not due until the 2025. So it's a long term. So that's all of your current liabilities. So total current liabilities would be 1,700. And then your total current liabilities would be that. And then you have notes payable, which is going to be your long term. There's my heading I was looking for. So your long term would be 3,300, and we don't have anything else that is a liability. So you would total your liabilities, and that would be 5,000. And then the last part is going to be your stockholders' equity section, which is your retained earnings, and you have to pull up your retained earnings statement, and it's $94.50. And then the other part of stockholders' equity is the earnings you make, and then another way to make money is by issuing your common stock, and it is $69.50. So your total stockholders' equity is 16.4. Let me check that. It's been a long day. 94.50 plus 69.50, 16.4. So your total liability and stockholders' equity would be this number plus this, which is 21,400. And that is the 2 questions that I've had requests on working in Chapter 4 homework.